Okay, hello traders, and welcome to this live intraday strategy webinar. Today is Thursday, February 11th. Mike Boutros with you on the horn. Great to be with you guys this morning. Jay, Ted, everyone in the room. So we are coming into an interesting move here. The dollar pullback that we recognized earlier in the week has continued to gather pace, but we're coming in some really interesting levels here. So for the menu on today, we'll hit DXY, Euro, Sterling with a seemingly radical breakout, dollar yen trading a little bit higher here, Aussie, Kiwi, dollar Swiss with a breakdown, now testing the monthly low, gold at resistance, 5 days consecutive up. We'll take a look at what that looks like. And dollar CAD at risk for a deeper cutback here if we break support. So decent list, certainly all of them at major key levels. So as always, any other trade setups or questions, feel free to throw them on the message board at any time. Let's jump right in. So really quick, this is what DXY looked like on the 9th earlier in the week. Okay, the basic weekly chart had turned last week, failed right ahead of slope resistance. It turned right ahead of lateral resistance, 91.92 into 92.28. We marked a high just below that. And here's the turn. On whole, okay, looking at this from 1,000 feet up on the weekly charts, there's really not much major concern until you get back into the yearly open. The objective yearly open is 89.30. Obviously, I hope it doesn't get quite that low, but that's sort of our broader bullish inval. Below that, you're looking for resumption of the straight breakdown that we saw in dollar earlier in the year, or earlier last year, with that 2011 trend line, which broke, and it's been a one-way shot. Here's the first rebound. This is what we need to hold support. Okay, yearly open support at 89.93. Here's what it looks like on the daily chart. So we're working now on what would be our 5th consecutive day down, coming off of downslope resistance. So here's the pitchfork we've been following on the daily chart. It's the same one that you were looking at here earlier in the week. That turn, here's the median line break and the break below the monthly open, which comes in at 90.53. So again, it's one of those situations where could see a little bit more downside before you get into any trouble. The 618 of the advance of the yearly range for 2021 thus far comes in at 91.12. Again, that 88.6 longer term that we were looking at converges on the yearly open at 89.93. So looking for a reaction right here, either today or tomorrow, for some basing possibly in the dollar. Below this, again, we're in trouble. That's the yearly open. That's a whole lot of stuff. So we really need to see something happen, basically just lower here today. Here's what it looks like on the intraday chart. And here's what it looked like last or back earlier in the week. So there's the breakdown of the February open that held below here, 90.12 rather, and 89.93, both regions of interest for possible downside exhaustion if we get there. Okay, anything sub 89.30, 89.90, excuse me, I don't want to be messing with. You're risking broader trend resumption for the broader decline in the dollar. That being said, this might be a nice opportunity. So DXY here, as far as economic data is concerned, guys, we're pretty quiet. We don't have anything for the rest of the week until consumer confidence. The Michigan surveys come out tomorrow, actually expected to be slightly better than expected, or slightly better than the previous month, I should say. Other than that, you do have more pertinent UK data with the GDP figures on tap tomorrow, but we'll go over that with sterling in a moment. For dollar, it's all about whether we base here. A little bit lower maybe, but 90.12, 89.93, that's what's got to hold. If that breaks, by the way, first level doesn't come until the low day close of the year. It's a low day reversal close that we marked on January 6th. That takes it down to 89.53. So that'd be your first, let me copy that over for you. That'd be your first sort of level of interest on the downside if we do clear 89.93. But for now, looking for a low here. Initial resistance 90.53. Again, that's the monthly open. Breakout there would suggest, again, that near-term trend has broken. Any questions on the dollar here? Very interesting price action. Haven't really attempted this, but certainly looking for pivot or inflection just lower. So Euro earlier in the week looked like this. And the breakout had or the breakout of this multi-month downtrend. Okay, we recognize that with the move above 120.51 earlier in the week. The major key resistance level is 21.28. Okay, into like 21.18. Now we're breaking that now. Here's what it looks like, and here's where we are. Similar situation. Similar situation. As we just looked at the DXY, there's room for the 618 tap there of the yearly range. The 618 tap here of the yearly range is a little bit higher. It's near 2197. I'm remiss to say that I'd like to see a pop into that region, but you know, that's got to be our bearish inval, unfortunately. Again, it's the top side stretch that we're looking for the exhaustion. Here's Euro, just really quick on the weekly charts. Take a step back. So big dump, came into a basic 236. Okay, we missed that 45 clip by like 11 pips or 12 pips. And here's the bounce. Okay, it's a reversal candle on a weekly stage, no doubt about it. But we're not out of the clear. Again, this could be just a near-term bounce within the decline. You're not into major resistance until 2197, 2218. That's the high week reversal close, just like we looked at the DXY. So it's a little bit different of a scenario. Euro leaves, or looks like it leaves, a little more room before you start to run into any trouble. Here's what it looks like on the daily chart. So obviously, multi-week channel broken. Here's the monthly open and the monthly range highs. So again, really precarious here. It's one of those questions. We used to write an article on Daily FX years ago called Trade or Fade. Basically, go with the trend or fade the trend. On a trade like this, I'm no longer interested in any long exposure. Well, I haven't taken any long exposure here, but for the most part, we're looking for that stretch to kind of fizzle out below 22 at some point. So again, a little bit more upstretch possible, looking for exhaustion. We need to move below the January low. That's 2058, 2053 right here to really get this thing on the reversal path for a move lower. All things held constant, 2150, 2197. That's a big range, guys, but we're looking for some sort of possible exhaustion on a spike higher from here. Questions on Euro. So with these stretches, guys, with trades that are making like 3, 4 days, 5 days up at this point, you know, the inclination, the trend is your friend, to want to just partake in that rally, it's just not warranted here, in my opinion. So we want to use some caution. I'll show you in gold, actually. The 5-day advance in gold is something I was checking out earlier this morning. A look back at the last 3 times, 2 of the last 3 times, not including this one, did see some major reversals there too. So markets are poised. You know, if we look at, I'm just going to take an ancillary look here at SPX. You know, we've been talking about that slope. Look what's been going on for the last 4 days, right? This thing's struggling. So look, it's not a bearish call by any means as far as risk is concerned, but we're seeing these stretched themes sort of across the spectrum, specifically talking to the majors here as well. So I'll leave you with that on euro dollar heading into the close of the week. All right, that's number 2. Sterling. So it's a breakout. Here's sterling on the weekly charts. I put this out earlier in the week. Here's what we look like right into the weekly open. Okay, this was on the 9th again, the breakout, and it materialized with 37.43. Now 37.43, guys, has been holding resistance for literally 6 weeks. Okay, this is the weekly chart. We probed many times, pushed, no closes. This would be the first weekly close above this level, and this is a critical level. Again, the Brexit gap, which we did fill a couple of years later, but nonetheless, major pivots along this plane, major pivots. You got the 786 retracement of the entire decline from 2018 into the 2020 low. You've got slope resistance, which is a 5-6 point touch. 1, 2, 3, 4, 5, 6. This is what you want to see. Okay, so on a materialized break of a major uptrend resistance, you want to see acceleration. We did get the initial acceleration early in the week. It's kind of fizzling out now. I'll show you the intraday chart in a moment. But all things held constant, a weekly close above 37.43 keeps the focus higher. The first major, okay, level of resistance on this breakout You know, I have some soft targets I'll show you on the intraday chart, but from the weekly standpoint, there really isn't anything until 39.55, 140, okay, where you start to see some major resistance. That's the high week reversal close. It was an outside weekly reversal. Major development was the onset of the major sell-off into 2018. That singular close converges on this just a little bit higher. So for the breakout on my part, if you're holding any long sub 37.43, you're break even and you're letting this thing ride. Here's what it looks like on the daily chart. Keep dropping my pen here. Sorry about that. Here's sterling on the daily. So you're seeing a little bit of losing steam, right? A little bit of capitulation. If we take, well, let me just show you one thing in a moment. Here's the pitchfork. This is the same slope, guys, that we're looking at on the intraday chart. It's just this plane, this gradient, reduced to here off the secondary high from back in September. You have one touch, two touch, no closes, one close, three touch, four touch, five touch, and here we are. So you're in this situation where you're testing uptrend resistance. Like, what do you do? I wouldn't want to try to fight this thing yet. At the same time, if we pop through here, slope doesn't come into like 39.30s. So there's still, you know, another 100 pip up to the upside if this breaks. I don't want to be caught flat-footed on that, trying to fight that. So it's a breakout, you know, any way you look at it, it's a breakout. Now there's going to be interruptions, there's going to be fizzle outs here, very precarious setup, but certainly at all things held constant, we've been talking about this break at 37.43 for months, since last year, actually. So I'm going to respect this break for now. Again, all things held constant as it stands heading into the US Open, it does look a little toppy. It looks a little tired. There's not divergence, but certainly the momentum is starting to fizzle out even on the daily chart. So use some caution here. Constructive above that 75% line, just below 37. Topside breach, like I said, 39.30s is really your slope region. First lateral level doesn't come up until just a bit higher. Any questions on sterling? Now, tomorrow you do get those GDP figures. Again, year on year, preliminary is supposed to show a contraction of 8.1%. The previous read, guys, for the quarter was a contraction of 8.6. Okay, so take that for what it's worth, right? A lot of the headlines are running with sterling about the vaccine news, and that's why, and the reopening, and that's what's inflating the sterling here. At the end of the day, I could assign you a million headlines, and I can tag and put post-it notes about all the headlines I want. Technical breaks. So constructive above 37.43. In the meantime, recognizing that you are a little bit spent here and that the advance looks a little tired. So plan accordingly. Any questions on sterling? And this is what the setup looked like on the 9th, right? All we've done is just rally into that slope, and we're holding this slope right now. Uptrend resistance on sterling. All right, last but not least from this update was on the 9th is dollar yen. And dollar yen, I've been, I've loved it. I've loved it. So I got out way early on this drop. 104.77 is where it kind of built on the rest of that. But here we are, right? So quick step back on where dollar yen's trading. We came off of uptrend resistance last week, okay? On the daily charts, it was pretty evident. You had a really nice reversal candle off of confluence resistance. Here's the daily chart. This is the highs from November. This is uptrend channel resistance, 2-day touch there, failure, turned lower. Right after that was the onset. Again, that was a really good opportunity to fade against the highs. I talked to you about this on Daily FX on Monday. And we did inevitably get the group break. Now here's the 38.2. I don't have it here on the daily chart for clarity, but here's the 38.2 with just lower those former highs from January. You see a little bit of a hiccup here. You see a little bit of a, exhaustion for the downside. If we get a bounce here, and on whole, when you look at a trade like this, you could see a little bit more room to the upside before any type of spill, but the turn looks pretty decent. So 105.30. Well, initial resistance right now, let me take a step back, is going to be right back at the monthly open. That's 104.77. You can see we're testing that here. Even yesterday, we tested as resistance and pullback. That's the first level. 105.13, bearish inval. 104.25, 105.24, 105.30. It's your weekly open. That's the 618 of the drop. That's what we would need to mark resumption, okay, of the broader uptrend here in dollar yen. That being said, honestly, I don't know what to do here. This could go for another pitch right into that 50% retrace, right into slope support, again, make another drive into this zone, in which case, again, I'd be looking for exhaustion. But if it breaks higher, I really don't want to get too excited on this, because if the broader dollar trend resumes, dollar strength resumes, you could see this thing march off pretty hard. So looking to see what kind of capitulation we get here near term. If you zoom this in, like to a 30-minute or so, it does look like you're setting some lower highs and slightly higher lows. So there could be a little bit of a wedge break or a triangle break here in the near term. Just something for reference moving forward. But at the end of the day, you're trading not too far off support, and resistance is a ways away. So I'm more of the mindset to look for one last low to fade, or a concrete break back above, obviously above 104.77. But if we were to get and close and push back above 104.90s, basically the highs that we made over the last couple of days here, you could see in a scenario where we're back in 105 pretty quick. So neutral here on dollar yen. I want to see this near term sort of clear out before I start getting involved with the abomination again. It was a great trade early in the week. I think we need to let it settle a little bit before we take another stance on this one. Questions on dollar yen? All right, and that is number 4. So Aussie, I'll be putting a piece out shortly on Daily Effects here about this, but I put this in last night's update for you guys because we had done a rework. So for me, and I told you guys this early in the week, I've been lost, okay, on Aussie for a while. Take it back to the weekly charts. Here's what it looks like. Like, this has been for me kind of messy. By my part, again, 76.35, that break should have yielded larger decline, a larger descent here in price. Now, momentum held support. Obviously, you didn't get much downside break below the slope, and here we are yet again with the reversal. Look, a little bit more upside could go. Same trade. It's the same trade. A little bit more upside could happen, but we're still holding key resistance. And if you guys recalled, when we broke back here, okay, in November, that was the first level we cited. This is the big zone, 78.36, 78, what is that, 78.01, the 2018 yearly open, the 88.6 retracement of the drop from the 2018 highs. I always tell you guys, the 88.6 is sort of that hidden fib, works really well in commodity block. I don't know why, no rhyme or reason, but Kiwi, sometimes Loonie, Aussie, they love the 88.6 retracement. So, aside from fibs, aside from the open of 2018, just look back. It's been a major critical price inflection point, right? For so many years, some highs, some lows, obviously acceleration on both sides, some highs here, pivot, here we are. So I can't get excited. I can't get excited about Aussie longs unless we clear 78.36 on a closed basis for the week. So you got some room here. Here's Aussie on the daily chart. So what I showed you guys last night was this daily chart as we were probing the upper parallel, right? Basic slope resistance. Looks like we're trying to push through it today. Watch today's close. Even if it does, it's still below key resistance. What are you gonna do? Buy into this resistance zone? So look, the exhaustion trade, I still think is what I'm focused on for most of these. If we get through this slope, sure, 78, 78.30s, why not? Nothing I'll be chasing, but that's still key resistance. Here's what it looks like on the intraday chart. So the rework is this slope. Now, I do need to note that this slope has some, again, kind of a liberal slope here with finessing the levels as it were, but looks pretty decent. And yesterday we highlighted this key region of resistance at 77.65. Looks like we're trying to press that now. If the US Open materializes 9:30 and we're above this level, yeah, we could see 78 easy. Okay. Ideal scenario, Mike Boutros's fantasy world, we kind of exhaust somewhere here, whether it's on a stretch of 78 or not, and close below 77.67. If that happens, or 77.65, I think you're on the onset for a decent pullback. That being said, near-term support unchanged from yesterday. It's still going to be 77.22, 76.85, bullish inval at the weekly opening range lows. We're focused on topside exhaustion on a stretch towards 78 if we get it. Questions on Aussie? You know, ideally, this thing starts to fizzle right here, right here. So keep an eye on this one as we head into the US Open. Okay, so Kiwi was the one we favored. It's funny, the tables have turned. Kiwi was actually one of my favorite setups at better than Aussie because I thought we saw a little bit more of a clearer play here. Really consolidation, very nice lower highs, higher lows, break to the upside. And I talked about this earlier in the week. Is this a test? First test of former slope resistance as support, and we're off to the races. Here's what it looks like on the daily chart. Really messy breakout. Long story. See these swing highs from January? That's what capped the advance here. 72.68 is the 786 of the drop. I have that labeled as the breakout because if that gives out, you're now clearing a former series of weekly swing highs and takes you back above slope. Here, unlike Aussie, right, which was holding that major key resistance, Kiwi, if you recall, guys, we talked about this breaking its key resistance, and we've actually used that level as support since the start of the year. Here's your yearly open. So it's a different animal in that we pivoted just into and closed below in Aussie dollar for the weekly charts resistance. Kiwi, we broke above last year and we're closing above former resistance, now support in Kiwi. So if this breakout is legit of this consolidation, and that tag yesterday was just a tag of former slope resistance, now support, you should see the resumptive trade take you 72.68. Not my favorite setup as far as, you know, the ideal situation, but in the case of dollar weakness, you know, save sterling, which is already in the breakout, I think this is one that you'd want to pay attention to. So Aussie threatening a breakout of multi-week consolidation. We'll look for that 72.68 breach to validate that move. Questions on New Zealand dollar? All right, so other dollar breakdowns of merit this week. Breakdown completely in dollar Swiss, which took out the opening range, or is challenging rather in my notes. I read it wrong. Is challenging the monthly opening range lows. So let me take it back to the reports. Here's what Swissy looked like. Again, no change to any levels on Kiwi from last night. Here's what Swissy looked like. And again, if you take a step, here's what Swissy looked like earlier in the week, right? We had identified a very similar scenario to dollar yen, was up into uptrend resistance last week. That pulled back. We opened the week bouncing off the median line, 75% parallel held. And I was warning you guys here on the 8th, you know, if we break this median line, it's a nice shot. It's a nice shot right into that 38.2 at 89.35. Now that 39.2 didn't offer anything. It plowed right through. It took out uptrend support. And now we're testing objective monthly open support with the monthly opening range just lower at 88.90. What happens here? If this breaks down, it's going to be a validated reversal. Plain and simple. Whoops. Here's what it looks like on the daily chart. Right? Pretty precipitous drop. I noted yesterday in the report, Swissy is actually the highest performer against the US dollar. Go figure that this week. With a decline of more than 1% as we were heading into the close of US trade yesterday. We're still about those levels now. The 618 88.67, that's going to be sort of the resumptive move in my book. It's one of those trades, again, where the objective bias looks bearish. You've broken up trend support, but you're on the back of, in this case, not 3, but third consecutive daily decline into the monthly open, into the monthly range lows. Use caution. If this breaks, like I said, it should be another accelerated move like this. Accelerated move like this. Looking for reaction inflection here today. Near-term resistance 89.20 backed by 89.35. That's going to be your bearish inval. If we get through that, we're back above the January highs. We're back above the late December highs. We're back above the 38.2 retracement and former slope support turned resistance. So that's your near-term bearish inval. Any lower from here, like I said, 88.67 is where you want to look for the next major inflection in Swissy. And you guys getting involved in this one? I've been writing about it for a while, and I'm not really a big fan of Swissy longer term. I could probably think of in two hands how many times I've put meaningful positions on this, but looks pretty compelling here. Looks pretty compelling here. All right, gold. What's going on with gold? Such a major pair or such a major asset, lots of headlines. I just love to see people's rendition just over the major news publications, guys, the financial news publications, of what they deem is the cause for the daily move in gold. It's so funny. Whatever your prescribed reason for this move is, it's pretty clean, okay? It's pretty clean. Here's what gold looked like last night. And we could go back into the previous updates. Here's what gold looked like back on the 4th. This was last week. I was telling you guys, look, we pushed below this critical support, but we closed right there. I think I literally snapped this shot at 402. It was right after the close last week. And that turned out to be the low, literally. 1848, we were talking about monthly open resistance. That's where we're at now. Now, we didn't have conviction on this low to add the retracement, but once you add the retracement, stop traffic, 1851 is now the 38.2. And again, we'll go back to last night's update. So the whole focus, or this was back on the 8th, excuse me. So the whole focus was, I'm sorry, here was last night's update. The whole focus was, do we get inflection off this key region? And that's still the focus, guys. That's still the focus. So you got 1848, 1851, nice confluence region. A breach close above that would validate a breakout of the downtrend. This is just a high, low, high. Pretty clean. Look at the precision on the 25% parallel. Precision along the median line. Precision along the 75% parallel. Here's the upper parallel. Looking for reaction here. If we breach 1872, 1892 shouldn't be that hard. Ideal scenario is we do actually hold from here. 1828, break below 1820, will clear the way for a larger decline again. Putting things in perspective here for gold on the weekly charts. Here's what the weekly chart looks like. And this is why I haven't showed you this chart in a couple of days, because there's not really much to write home about. Here's your yearly open. Big old outside weekly reversal turned us bearish. And then this happened. So what's this on the weekly chart? Noise. Noise. You're not above slope. You're not below Fibonacci support. You've just been doing a whole lot of nonsense. So it breaks down again to the daily and intraday charts. Here's the daily chart. Now, what I wanted to show you here is we're on the onset now, and it's kind of sucked back a little bit since before the webinar when I was doing a review on this. But if we were to complete 5 days up, right, you can bring up the consecutive candle count indicator here, and you can just look back, quick look back. Last time we saw 5 days up was here. That was the onset right into the beginning of the year before the pullback. So we'll discount that one on account of seasonalities. 5-day rally right here, saw another 4 or 5 days, not much pullback, right? Moving along to here, was the February rally, and certainly that one saw the bigger washout before resumption. So it's not suggestive, guys. Obviously, today's candle is not even out, and it's actually showing as a negative right now. But I just wanted to show you why, that stretch theme that a lot of these trades had really radical, nice 3-4 day runs, 5 day runs in some cases. You want to start to be careful with that because, we're reaching trend extremes. Here's basic slope resistance. If you discount the January break, you still have 1, 2, 3, 4 touches. Again, on the intraday chart, that's also where the upper parallel is for that pitchfork. Looking for inflection off 1850. Any questions on gold? I guess I'll just show you the Bitcoin chart. I didn't really want to jump into this, but the pitchfork that I added earlier in the week seems pretty damn dead on. Look at this. Again, this is in log scale, guys. Obviously, it's going to shift things a bit if you turn it off, but for the longer term chart, specifically on the daily, it works a little better. But you can see whatever format you choose here, it's been holding pretty decent. You're now, again, the big level on the upside that I've been talking about in 49,646. If we break out from there, again, you're all on slope. But this whole argument of the Bitcoin trade replacing gold as the safe haven, I just want to show you, they've been rallying together over the last 3 days, 4 days. So a lot more, in my opinion, speculation happening here per se, as opposed to the haven trade, which everyone's equating it to. But just some levels to keep in mind here. I'm not involved on Bitcoin. The end of the day, the former high day close right here at 40,666 is going to be my new bearish inval, or bullish inval, excuse me. If we get below those January high day close, I think that's where you sit the onset. But till we do, stand clear. So quick note there. Last but not least, it's interesting we put dollar CAD last year, but last but not least is dollar CAD. So weekly charts, we've been going over this for a while. Dollar CAD is marching to the beat of its own drum, specifically as it pertains to these weekly charts, guys, because on whole, for the year, this thing hasn't done jack, okay? We dropped the yearly open right into key support. We talked about this level for literally like 3 months, okay? 25.80 to 26.67 to 786 to 2018 objective yearly open. Some really nice close lows in there as well. Slope support for the broader pitchfork we've been following. Channel support for the near-term decline we've been following. Beautiful divergence or close to divergence. And here's the rebound. We've done nothing. Here's the yearly open, yearly high, yearly low. What do you do? What do you do? So we're looking for clarity. We're looking for this contraction break to kind of give way. Here's what it looks like on the daily chart. Today's important because this is the slope. I think, if I'm not mistaken, Jamie's looking at the same slope, but levels that we're looking at. Here's your 2020 low, objective swing low. Here's the 618 of the objective yearly range for 2021. Here's slope support. What the heck is that? It's threatening a break. And if the break materializes, again, there's nothing to like 26. It's another 70 pips to the downside. Now, as it stands, one thing I will highlight is that we are poised, as things look now, to mark an outside daily reversal lower. Remember, when this happens at the lows, can oftentimes be an exhaustion pump. So I'm cautiously tracking this one like a hawk today. Ideal scenario to call the bounce, we'd want to close above 27, period. But even if we were to close at these levels, man, I'd be remiss to try pressing a short, guys, because again, that's looking a bit tired. So the daily chart has you at pretty much like a breaking point. Here's what it looks like on the intraday. And this brings a little bit more clarity to the levels on the 2-hour chart. So there's that same slope we were looking at with the daily. Here's the 2020 swing low, again, 2688. Here's the 618. You know, we saw a little bit of capitulation here. Here's the push lower, maybe a drawdown to 2650, but I want to see this thing back above 27 if it's going to, excuse me, if it's going to turn. A close below this region, guys, don't touch it. Don't touch it. You could fake out to 26 tomorrow and then rebound. It could be a wish-wash trade right and left. For me, again, I'm looking for possible inflection, possible divergence, well, possible inflection or possible bounces lower. We are getting divergence here with price action making a lower low as the oscillator. Well, I stand corrected. The divergence points are from here. Lower low, lower low, lower low, higher low, higher low. Not this one, but this is a higher low. So the exhaustion, I wouldn't say it's apparent. Yeah, into 30 minutes. It's just not there. Not yet. But dollar cat, look for inflection. We want to close above 27 for this to play the bounce before you even try anything on the bounce. I know Jamie has us long already here with stop against 2640, if I recall, which is right below that 2650. So I like that. I like that. Let's look for some exhaustion here on the downside possibly today. We're clear on Aussie or CAD data rather for the rest of the week. So sheer price action sentiment's driving this one. Okay, guys, that's everything on my list. Do let me know if you have any other questions or specific trade setups you want to review. And I'm waiting for Marchin, and here's Marchin. Aussie Kiwi, Sterling Kiwi, and Aussie guys. Only a few, but Sterling Swiss looks like a break happened. Sterling Swiss. I think you asked about that pair before. That's weird. Great British. Well, I haven't looked at this one in a while, so give me a second here. So I can already see sort of the consolidation break that you're talking about. But again, even that's a few days, a few weeks mature at this point. I'd use caution on this one, Marchin. Put a pistol to my head. I would say uh, you're threatening exhaustion here, but you don't really see highs look like this too often, where it just continues lower. So I would still be on thread, or I'd still be looking for that possible stretch and tag of the 618. In fact, that 618 is not even right. Hold on. Like here, I think there's more room. Oh, constructive above the 50. That's even cleaner. That's the weekly open, monthly open, just lower. 122 is key support. It's the monthly open, those former swing highs, channel support. You're kind of mid-range here. Yeah, a few weeks ago. Yeah, March, and I see what you're saying. Yeah, definitely. That's a breakout, pure and simple. Probably called it ahead of the sterling, actually. This is not a bad setup. And what's interesting is that there's Swissy strength happening. If you look at dollar Swiss, that's moving down pretty aggressively. But sterling strength kind of keeping this, doing this for the last couple of days. So I'm not surprised to see this, right? Sterling dollar breaks out, dollar Swiss breaks down. That's strength on both sides. So not too surprised to see here. On whole, on its own merits, though, I would stay constructive above 22, looking for 2470s. Let's see if the near-term picture has anything for us here. All right, let's scratch this. And let's go with the same slope we were just looking at. This is done null and void. This is null and void. This is null and void. Okay. Yeah, that works too. And I like that it highlights the same zone. So check this out, Marcin. Um, any way you slice it, that 25 level, 2470 level looks ridiculous. You got upslope resistance as far as the channel is concerned. Again, I like working these channels when you have extraneous highs like this. Drop them to the secondary highs. Sometimes you get a little bit better touches on the initial move. And that looks like it may have just struck, but continues to highlight moving forward in time, basically into the start of next week, right? Remember, guys, we do have President's Day on Monday, so the markets will be closed. And there will be no Daily Effects webinar for that matter, but we'll be here on Tuesday, obviously, to talk about what's going on. That's where I'd be on the lookout for the fade. I don't know if you're positioned on this already, Marcin. If you're long, man, I hope if you are long anywhere below 22, I'd just have a break even stop. But if you're above, I'd be looking with great intent on whether we actually pivot on the median line. It's been a decent plane, a slope and price. As far as sort of the resumptive trade, if we're going to get one or one last stretch, as it were, to the upside, you could be in a near term bull flag right here. I mean, depends how granular you want to get with it. Possibly. In which case, basically the 2-hour hourly close high here. Let me see what the hourly looks like. Yeah, it's not a bad spot. Something like this. Look for support into the zone. But if we break out, the big upside level on the upside is still, in my opinion, right into that 124.70 level. That's huge. Marcin, does that help? He says was long, got out already. Okay, I don't blame you. I don't blame you. And honestly, what a move. It went right into slope resistance, right? So for the re-entry, you'd want to look to see if we get an exhaustion low on a spike into this region. Now the stop would have to be down here, which is not really, that's quite a ways where we are, but considering where your target would be, might be a decent setup. Might be a decent setup. Let's see how many touches this gets. Possibly. Yeah, definitely something to pay attention to. Watch that zone. Watch that zone here for support into 2860s, 2880s, max upside 2470s. Does that help, Marcin? Interesting pair, man. You got me interested on this one. The other ones you're looking at are Aussie Kiwi. Let's see what this big guy's doing. So nice recovery there off of slope support. Breakout earlier in December is done. That's the 6-1. I bet you we're past the 618 already here. Oh, we're right there. So if you take the yearly range, here's your yearly open, yearly high, this month's low, you're at the 618 right here. Breakout level on this, Marcin, isn't until the highs we just got rejected at, 2019 high day close, major pivot in price. That would require a break of the median line to move higher. I don't like the positioning here. I don't like the positioning here. Now, from a near-term standpoint, you actually might have an opportunity to press a short. That's on account of if Kiwi dollar has broken out and Aussie is still below resistance, that would be sort of the focus I would take, the tact I would take on a trade like this. But these types of one directional moves, it's not our best trade, guys, for near term. You know, we want trades that have more back and forth. Back and forth, re-entry, you got to stop, you can add to the position, break, keep adding. The one-way directional moves of a trade like this, it's just not something of interest to me. So let me just tack on that retracement. Weekly open support. Wow, real slight divergence. Real subtle. I like these. These tend to be really good signals. So real subtle higher high. The lower high in the oscillator went above 71, below 30, tend to be pretty decent. But again, the closer to 50, the stronger the signal. So not 100, not 100% yet, but it does look quite interesting for a possible topside exhaustion trade there. Once that would happen, if it does happen, margin, tack on a quick retracement, see where the 38.2 comes in and look for slope. That would be a decent pullback if we got it from here. But I think that's a larger encompassing risk at this point from the near term front. All right, Sterling Key. So we did Great Swiss, Aussie Neat Kiwi, Sterling Kiwi, and Aussie Cat. Sterling Kiwi looks like this. The crunch continues. The crunch continues. So I do remember you asked about this last week. This is the consolidation that we had noted. We're still there, man. In fact, yesterday could have been a big fake out for a lot of people because not only did it break the monthly open resistance, it broke through the monthly initial opening range highs, and here we are pulling back again. Fake out galore. He says, was for me. Yeah, I don't blame you. I don't blame you. So yeah, use caution on this one. Again, I'm not a big fan of telling you guys to watch relative performance, but on trades like these, Marchin, it kind of just makes sense to keep your eye on what they're doing independently versus the dollar. Here's the pitchfork, I guess I added for you last week. Still looks pretty decent, but definitely looking a bit toppy and tired on the upside. Listen, for me, the trade would be the short against 92 to 70. There's nothing, I don't want to take a short from here. Obviously, you're way off already. 92.70s, 92.50s is going to be the bigger region for me. I'd be way more interested in trying to fight the trade. Yeah, I can't get on this. It's nothing that's super interesting to me yet. Just want to see what this looks like. Bear with me one sec. Gives you a little bit better of a gradient. Something to consider. Whoops. Something to consider, Marchin. I wouldn't get operable off this yet. I wouldn't start operating off that slope just yet, but something to consider if that is a fake breakout of a multi-month consolidation, or if that is a threat or just come off multi-consolidation resistance, then the downslope should offer a little bit of a tell here. But yeah, I'd be near term, I'd be looking for a little bit deeper drawdown for me. Last but not least, Aussie CAD. possible breakout scenario or an attempt. So let me use just those two highs. 1, 2, speculative. Third confirms. Last 2 days have been a wash, trying to get through, unable. This could turn into something. Here's your monthly open. Yeah, okay. Looks tired. Again, looks tired. I wouldn't be chasing this one. That's not a breakout I'd be comfortable calling a real breakout yet. I mean, at the end of the day, the weekly opening range never even got cleared on this one, March. And so um, just taking it from a tactical bias, like basics, I don't really get aggressive on trades where there is an opening range intact. Let me say that, right? A lot of times, guys, you won't get a weekly opening range. The market will open, it'll continue to run one direction or the next. We saw some of that this week in gold. We saw some of that in euro. But when you do get a confirmed two tag touch of the lows, highs, failure, and then this, I don't want to make any assumptions unless that weekly opening range. This is how we get chopped up the most, right? Because it looks like a breakout on the daily chart, but if you look at it from a near-term focus, even the weekly range hasn't given out yet. So there's not really that conviction to try to press it. Pistol to my head, I would say look for a move, for a move higher here. But again, my problem is the relative performance, Aussie and Kiwi. I'm looking for a high in Aussie. I'm looking for a low in dollar CAD. So, some of these FX cross pairs, Marchin, I'm all about it when we're trading into major key levels. But man, these trades specifically when they are range bound or when you're sitting mid range of the weekly range or the monthly range or even trend, we're not even near trend support or trend resistance. They're going to be the hardest trades, brother, because it's a dollar directional market right now. Okay. It's a dollar directional market. I mean, they're pretty much moving in lockstep. You got your ancillary trades on the side, sterling with a seemingly multi-year breakout and stuff, but for the most part, very dollar centric. So that puts these crosses in very treacherous waters. I'll just say that. So I wish I had a little bit more conviction for you on this one, but I wouldn't touch it. If it breaks 99 is your breakout level. Okay, that would be just a straight break to fresh multi-year highs if we get through that. There's nothing to stop this. If we get a daily close today above this slope, maybe that adds further fuel to or conviction to the bias. But a weekly range like this, I'm not going to get too excited about just yet. And let me just see one thing. I mean, we're past the 618, I'm sure, of the drop already, but let's see how far off. So we're just above that. And let me just see one other thing real quick. Oh, not even the 1618 is going to get up there. Yeah, no luck. Well, here's one thing. Here's your your weekly open. Converges on this near-term slope. That's your bullish inval. And that kind of makes sense because if you make it below the weekly opening range, the weekly open, that's in and of itself a bearish sort of trigger for you. So that would be the move for the onset. All things held constant. There's your breakout level. All right, Martin, does that help? Does that offer some clarity on that? All right. Hey, he says, thanks. More than welcome. More than welcome. All right. Well, guys, I'll go ahead and wrap it up here for the rest. He says a lot. More than welcome, Martin. Thank you, man. It was good seeing the room. Stay nimble. Okay, stay nimble into the close of the week on some of these crosses. Those dollar crosses, man, I'm looking. There's something up here going to happen. I think we'll get a really decent play on some of these setups. Keep your eye on the fade for dollar CAD if it holds back above 27. Keep your eyes on euro. Keep your eyes on gold. Okay, sub 1850 on gold might be a decent play for another pullback towards 1820. And there's a lot on tap. Sterling, if you're holding the longs, guys, stay long, stay strong. Watch tomorrow's release. We are at uptrend resistance, so keep that in mind. Either way you slice it, it's a trade that you want to fade out as you start to get higher, not fade in. So I'll leave you guys with that. Best of luck trading to the close of the week. Have an awesome weekend, guys. I know I'm heading out skiing tomorrow to get some of these slopes and get some shredding action, and we're off on Monday. So I will see you on Tuesday morning right here for the Intraday Strategy webinar, and we'll kick things off then. Have a great weekend, guys. Cheers.